Hello, guys. I am an insurance broker and I am fully licensed to sell insurance product in Canada except Quebec. My contact details and list of all the products that I sell are written in the video description and channel bio. So check that out if you are interested. Let's start with some basic core personal and business finance concepts. First, we need to understand what is the basic concept for the finance or financial stuff. Basic financial concept usually that covers the fundamental principles of managing money for individual or maybe the business. The key idea that includes for financial is the budgeting, savings, investing, and we need to understand the key financial terms and their metrics, right? So today I'm gonna give you the superficial idea. Like if you can see like the personal core finance concept that includes number one is a budgeting. Okay, budgeting is the process of tracking your income and also the expenses that create a plan for how to manage your money. That is called the budgeting, right? How we manage our money, that is called the budgeting, right? Second thing is savings and emergency funds. Savings is the most and crucial part or portion in our life. The saved money always help in emergency fund. So what does that mean? That means setting aside some portion of your earned income for future use. So the saved money you can use in emergency or specific types of savings that you can use for unexpected events as well, or maybe the situation, unexpected situation, right? Unexpected situations. Maybe you consider that as a emergency funds, right? Emergency situation occurs to everyone's life every day, right? So that saved money you can use it for emergency situations. Third one, for the financial concept, for we are talking about the personal only, is investing the saved money. How you can invest? So you can put some money into assets with the expectation of generating a return over the time, means long term. That could consider as a short term or long term investment that will build your wealth for future or maybe your retirement related stuff. Investing is also very crucial, same like a savings of fund, and then you can invest that in a proper and right way. We can go ahead further. It's not only the budgeting and savings and investing, you have to also taking care of your credits and debts in your life. Not only the saved money, but when you invest, but at the same time, the credit is the ability to borrow money with the promise that you're going to pay it back later on. Could be the credit cards, if you borrowed some money, and that we always pay them back, usually with the interest, right? And this interest, it's not always the simple interest, always that considered as a compound interest, right? And if we don't timely manner, we don't pay it back, then it could, affects your credit score, and then interest rate as well that we have received, that will affects always. So whenever we use the credits or credit cards, make sure you can use in a limit, that based on your income, how much you're gonna monthly basis, you can put it back them, so no interest occurred to you, right? So that's what it is, right? Now, in between, I'm gonna talk to you that this financial concept is, I am just explaining because we lived in Canada, and we are the brokers, we are the insurance broker, you can say is agent, sometimes people says that advisors. So yeah, any kind of a representative or agent, they can help you for your basic needs. We are not like a certified financial planner or anybody, we are not the tax consultant. So don't take this one that we are the professional certified. No, we are like a life insurance agent, and we are giving this to each and every family, the basic financial concept, where we are not giving you the legal tax advice or any kind of a legal financial planning. No, we just give you the basic needs, what kind of things you can take care of in your life as a basic principles, that will make your habit, and that habit one day it's going to compound, and the money is doubling, tripling, and that money you can use for your retirement, child educations, your estate planning, all of them, all everything, so. And this doesn't mean, or it is not like, in a particular country, doesn't matter wherever you are live, it will, or the basic this principle, if you always taking care, that is always helping to you for your great saved money, for your retirement, your child educations, etc., right? So don't take this as a like, short way, understood this concept, and try to save in your life, make it habit to save the money, right? After that, you can say is, the money you are investing, you always taking care that this money you are compound interest. Here, this is the powerful concept where interest is calculated on both the initial principal and the accumulated interest from the past periods or previous periods, that cause wealth to grow exponentially over the time, because the money you are putting, and you are making double, triple, or make, or maybe the money you put, if it is compounding in a good interest rate according to the rule 72, right? The percentage of rate of return you are getting, if you divide it with 72 and whatever the number comes, so like this 72 divided by, let's say you are getting rate of return 6%, right, from the bank, then how many years this money double? So 12, 6 times 12, so it is 0. So usually if you divided whatever the rate of return you are getting with the 72, the number comes 12 years, your money will be double in 12 years. So you should understand how the compound interest works, or how the rate of return works. We're gonna go like a deeper in a second episode. I'm gonna explain that to you, like the responsibility, and then the money compounding and all this stuff. Later on we are coming out, and all the financial products in each episodes I'm gonna come with shortly, or like, with the time manner, one product at a time, and we're gonna go deeply that explanation. Okay, So compound interest is a matter you can always put the money and compound money, right? Same time, you have to always look into the mind and keep into the mind, you have to beat the inflation. The country you are lived in, you have to always check what is that geographical or that country's the inflation rate. Inflation rate, that is the a crucial part. What is that inflation? Inflation is the rate in which the price of goods and service that increase over a time and the currency purchase power decrease. Financial planning must account for inflation. It is a matter, right? So the money you are putting, if that money is not growing or it is not beating to the inflation, that means you are not doing anything, the growth is not there. So always keep in a mind and invest your money somewhere where you get like a good rate of return, which will minus or subtract your inflation, and whatever the amount, that is your actual rate of return. So always keep in mind, we have to invest our money in such a kind of a funds, GIC or wherever you're going to put. Make sure your money is growing with the beating of this inflation rate. That is called the inflation. 7. And then 7th, let's say net worth. You have to always try in your life and save the money. You can build your net worth more and more in your life. Net worth is kind of your financial health that is calculated by subtracting your liabilities from your assets. Means what you owe and what you own. Owe and own, that is the difference. You can subtract both of them, and whatever the numbers comes, that is called your net worth. Number 8, that is risk and return. Okay, what is the risk and return? That is a relationship between risk and rewards in investing. Higher potential of returns usually comes with higher risk. More risk you take, more benefit is. Or you can say returns, high returns. Okay, you have to keep in mind, these are like the basics financial concept. Another 2 left. After that, diversification. What is that? Understanding the risk and return. More risk you took, more benefits or return you will get. So that will help you the diversification of your net worth or your assets. Diversification is something you are spreading investment across different kind of assets to mitigate risk. That can protect your portfolio from being overexposed to a single risk factor, right? Doubling, tripling your assets or net worth, right? These are like a key points for your basic personal finance. And after that, when you achieve all this, life is, go very fast. We never know that now we are in an end stage in our life. So everybody, we are living in a great country where the taxes are very high, and the estate tax and all kind of mandatory stuff that each and everybody has to go through that process. So the last one is taxes. Whatever the money you are earning and making your asset and investing, you need to understand the mandatory contribution for the state or maybe the federal revenue that you are generating. you need to understand how taxes applies to your income or investment and your assets. That is a crucial for financial planning, right? These are the core personal financial concepts that I give that basics idea. These are the steps that you have to keep in mind, okay? And then invest or save money according to that. Now we're going to talk about a little bit for the business financial concepts. What things or key points you have to keep in mind for business financial concepts, right? Business where not each and everybody they are working individual jobs, you know, any of the country they live, doesn't matter, but to do more or fast progress or growth in your life, business is very crucial. Not everybody can have that ability to do the business, but that is not tough even for everybody's life that nobody can do the business. Everybody have that a great privilege. They have that courage, their knowledge, their capacity. If with your mind or in our own mind we strongly decide nothing is impossible in the life, anybody can do the business, okay? But here I'm going to give you a little bit idea like what core benefits as a business guy for the financial. So number one is, in a business when the people do, they have to keep in mind their assets, their liabilities, and their equity. This three is a very crucial for the business guy. There is a balance sheet, some like in a business for all these three assets, liability, and equity. A balance sheet is always available for that business that summarize what the company owns, means assets, what it owes, means liabilities, and what is the owner's stake. Stake means equity. So the basic fundamental equation is assets is liabilities plus shareholders equity. That is called the assets. Okay, that's a basic formula. After that, in a business, you need to understand what is the revenue, expenses, and profit. These are the basic stuff. Every individual, those who are a business owner, they have to keep in mind their own business. Each year, what is the total revenue for that business? What kind of expenses that business does or occurs? And end of the year, this is a big profit. Every individual business owner, they seek a good profit in their business, right? So let's say revenue. What is revenue? What is revenue? Revenue is total income that you generate from your sales, means business sales, right? What is expenses? Expenses is something that cost which is incurred to generate this revenue, right? The cost that is incurred to generate this revenue for your business. And what is profit? Profit is something which is the called, another way is net income is called profit, which is the money, dollar, the money left over after expenses, that is subtract from the revenue. So I can say net income, you can say profit, which is revenue minus expenses. It is called net income, right? It's a very, very key things, these three, for each individual business owner. Okay. Number 3, cash flow. Cash flow. You have to always look for your business cash flow. Means whatever the movement of cash in or out for your business. A cash flow statement is a financial report that details like whatever the cash generate from operating, also investing, and your financial activities. That is called cash flow, right? Cash flow needed to run your business smooth and profitable. We need that. Everybody needs that. And all business owner, they can run behind a good sales and good cash flow for the business, right? Once this is good, after that is coming out as a working capital. That is a crucial for a business, like the working capital. What is working capital? Working capital is something that you measure of a company's short-term financial health, that is calculated as a current assets minus current assets minus current liabilities. That indicates the business has good enough liquid capital to cover their short-term obligations. Well, if it is a medium or small businesses, right? This is the formula. Doesn't matter small or big business, but more revenue, it's going to be more capital. Medium is a medium, right? It depends like what kind of business you own, right? The revenue is depends on that. So working capital is a crucial things as well. Okay. After that, the 5th one, we can say for the business financial concept, like what is the core benefit that we can keep in mind is called return on investment. Usually we can say is return of investment, ROI, right? ROI, it's kind of we can consider as a metric that we always used to evaluate the profitability of the investment, right? Usually that measures the gain or loss of generated relative, like for the initial cost. Usually as a business owner, like anybody can run the business, it is always two things happened. Either you profit or you lose it, right? That is considered as a return of your investment, right? Profitability for your business. Either you are gaining or losing money, right? That is a rate of return. 6th, as a business, you are putting some time value, we can say, of your money. We consider as a TVM, time value money, right? Basically, the sum of money which is worth more now than the same sum will be in the future due to potential earning capacity. That is the foundational principle of valuing your investment towards the business, right? That is called as a time value money, right? We also consider depreciation and amortization money, right? Because all business and every person, well, everybody loves to do the business, and not everybody born with the millionaire, right? Some of the family, they live generational like a good money, then they are like, their wealth is very good, so they can utilize that money and always do the business, because business is something where you can have maximum profit, and then the same time you are helping so many family as a employee, and you are running their families as well, and you are making the same time your profit, and you are carrying like generational business. But whenever we do, and then the people who don't have a good wealth and they don't have good enough money, then they always put some kind of a down payment, and they take with that credit, like, the personal, we talk about, the credit is good, then you can access more loan from the banks or maybe third party or any financial institution, right? So that time, when they took the loan from the any kind of a bank or any financial institution, then we as a business owner, we always consider depreciation as well as the amortization for that business, right? Depreciation is something you can say is in accounting method, like, that spreads the cost of tangible assets over its useful life, right? Tangible assets, like, that spread towards the cost over the lifetime, or for the useful life, that is considered as a depreciation. It depreciation is like the things you're going to do that today in a longer time, based on the depreciation cost cutoff, it's going to decrease the value or something, right? And then the amortization is something that you are paying off debt over time, or spreading the cost and intangible assets over its useful life. Okay, so these two amortization, we are saying, like, if you borrow money for the house mortgage or maybe the business, we are taking that amortization for 10 years, 15 years, 20 years, 25, 30 years, right? So somebody is giving the money, you are borrowing from any third party, and whatever the decided or contractual agreement, the rate of return we are putting for particular amortization period, that is called amortization, right? And the last one is financial statement, right? Ultimately, whole year we run for the business, we increase the revenue, we minimum or whatever, like, good reasonable amount of that expense comes. When you minus, then you will consider that profit, and based on the profit, or that numbers, like, all the financial numbers, that we always go with some kind of a CPA or tax consultant, and then we always file, or fill a tax for that business, right? Then they will give you a financial balance sheets, and then they, based on your assets and everything, they claim to the government, and they pay the taxes after all, like, all the expenses subtract from your total income, and the leftover based on your province or federal tax applied. I'm not the tax, again, I am not the tax consultant or specialist here, but any superficial knowledge everybody does. So it is not mean that, or I'm not gonna give you the wrong advice, but all your business number, you can go with your tax consultant, and they're gonna help you file the taxes, and they're gonna give you the balance sheet or income statement that will shows what kind of cash flow, or what is the profit particular year that your business did for you, right? So hope all this information for core business financial concepts that I have explained to you in a little bit brief idea, right? Hope that will gives you the clear idea what should be kept in the mind before you start the business, or if you are running the business, always look into it. Either your income is as a. That is all for today's video. So like, share, comment, subscribe, and stick around because I will be posting more videos. My contact details and list of products that I sell are written in the video descriptions and channel bio. So check that out. Thank you.